Hello, fellow investors. Today we are going to take a look at Facebook's stock and decide whether this is a good opportunity to buy it or not. So let's start. First and most important question we have to answer is where are the growth factors for Facebook? So let's check what Facebook actually does. So we know it as a company and as a social platform, but many people do not know that Facebook, beside the Facebook platform, is running also WhatsApp, Facebook Messenger, and Instagram. So in top 5 biggest platforms that are used by users, 4 belongs to Facebook. The only one that is a big one and is not owned by Face is YouTube. So currently monthly active user for Facebook itself is 2.8 billion people, for WhatsApp 2 billion people, Facebook Messenger 1.3 billion, and Instagram close to 1.3 billion. Let's take a look at the data from January 2020 about how does world population look like. So we have 7.75 billion people living on our beautiful planet, and 4.5 billion has access to the internet. Out of that, 3.8 billion is active social media users. So this sets some limits for Facebook. So it would not be possible to reach to other users, to people who are not having access to internet. So the 4.5 billion users is potentially max what Facebook can do. But of course, it would be very difficult to convince people to be social media users if they are not interested in that type of situation. And I think that like elderly people or very young people, like 2 or 3 years old, might not be even possible to introduce them to social media at the very beginning. So by Statista, at the end of 2020, there was around 3.6 billion active users of social media, and that number is going to grow to 4.4 billion at the end of 2025. That's a forecast. So as we can see, Facebook currently sports around 2.9 billion monthly active users. This is from the recent Q3 earnings report. Out of that, 950 million is from rest of world, 1.3 billion is from Asia Pacific, 423 million is from Europe, and 261 million is from US and Canada. That's important because if we take a look at geographical comparison by average revenue per user, or ARPU, we can see that US and K is generating most of the money for this company. So basically US and Canada is generating $52.3 in revenue per year per user for Facebook. In Europe, average revenue is about $16.5. In APAC, 4.3, and rest of world 3.14. So worldwide on average it's $10 per user. So as you can see, we have 2 growth factors for Facebook here. First one is increasing number of active users, and second one is increasing the revenue that is coming from a single user. So let's check how the growth is looking. So since Q3 2019, so it's basically for 2 years before, the number of users in US and Canada are growing slowly. So we have 9.3% after 2 years from growth in Europe, 5.6% growth in US and K, and APAC and rest of the world are growing very fast. APAC is growing at the pace of 26% and rest of world 18.3%. On average, number of users for Facebook is growing 18.8% after 2 years. Now, growth in user number. Now we have the growth in ARPU, so average revenue per user. So as we can see, the highest growth we have in US and Canada, and second highest growth is in Europe. And this is really, those numbers are really awesome. So basically, after those 2 years, Facebook is able to generate about 90% more in terms of sales from users from single user in Europe and US and Canada. That's really awesome. It's 40 something% per year. So it's really high growth rate. In Asia Pacific, we have 61%, and in the rest of the world, we have 72.5%. So on average, the revenue per user is growing at the pace of 64.2%. So let's go to the company financials. We will start with net debt. This company is really sitting on cash. So net debt is in the negatives, which means that if Facebook is able to, well, if Facebook wants to pay all of its debt, it will have still $29.5 billion in cash and cash equivalents in 2016, and this number is increasing to $48.7 billion currently, and that gives us the clear indication that in terms of cash flow, this company is really cash positive. So as you can see, basically we have split cash from operating activities, you can see in blue, cash from investing activities is in orange, and cash from financial activities is in gray. So basically the company year after year is able to cover all of its expenses just by its operating activities. It's awesome because this means that this company does not have to use debt to finance its operations. So in financial operations, on financial activities, we have mostly the stock purchase. So this company is spending a lot of money to buy bucks. Okay, so let's take a look at valuation. So we have two different price to earnings ratios. I'm most of the time when the company has net debt in the negatives, I'm usually excluding this surplus of cash from its valuation. I am just removing the net income. From the net income, I'm removing interest income that this company should generate on that excess of cash. So in the first, in the blue, you can see the regular price to earnings, and in the gray, you have the price to earnings with this cash removed from the equation. So Facebook in 2016 and 2017 has the price to earnings ratio above 30. Right now it is around 24, 23 something. Same situation with price to EBITDA. We have 22 and 20 in 2016, 22 in 2017, and currently price to EBITDA is around 17, 18 points. Price to cash from operations ratio is the same situation here, around 20 in 2016 and 2017, and currently it's below 20 at the level of 18 and 17 something for the last 4 quarters. So those results are really good. Those valuation metrics are showing that Facebook is quite cheap compared to its growth, but to the growth we will go in a second. So what does Analysts say about this company? On average, analyst price for Facebook is $405, so it gives us about 19% upside. Now, there are of course risks for the company, and those risks, I think they are coming from 5 different areas. First is regulatory. Well, after Democrat winning in the United States, the latest elections, presidential elections, I think the regulatory risk is much less of an impact right now. It's not very likely that it will happen, but there is a problem with privacy issues, especially with new iOS that has been introduced by Apple. So basically right now it's much more difficult to track what users are doing on Apple's devices, which of course is undermining this the most important, the most critical data that Facebook gather about us, and it's selling to advertisers. The next big thing for Facebook might not be an issue in current year or next few years, but it is something that should be watched carefully. Facebook is getting cheesy for teenagers. So if you take a look about who is using Facebook and Instagram and other social media platforms that are run by Facebook, usually there is not many teenagers. So like right now, teenagers do not like to be on Facebook. It's not very sexy for that group of people. So right now, teenagers does not have much net worth in terms of income. But when they will be adults, when they start earning money, it might be an issue. So if Facebook is not able to attract that group of people in few years, the number of users might start dropping. Of course, another problem is new competitors like TikTok. TikTok is much better in engaging teenagers or younger people, but of course, people in mid-30s, mid-40s are the best potential targets for advertisers. Those are people who are spending most money. Currently, they are not spending it for necessities like medicine and stuff like that. They have children, so they want to buy some stuff for children. They have other interesting needs that they just like to use the life, to enjoy the life. So people in mid-30s and 40s are the most interesting targets for advertisers, and for that, like being able to reach that people, advertisers are going to pay most money. So the potential reaching max customers number, this is the situation where Facebook is currently used by almost 30% of living people. So in foreseeable future, we will reach the maximum population that is going to use social media. I mean, as we mentioned at the beginning of this material, Facebook is unable to go and to reach more than 4.5 billion people, because this is the number of people who is using internet. So we still have like 40 to 50% growth in terms of users, the potential growth in terms of users, but still we should be thinking about what will happen if there is no more customers for this company. Then the only way to increase profits and sales will be growing the ARPU, so growing the revenue per single user. Okay, so now let's go to the financials of the company. Let's take a look. How does it look financially? So financially, Facebook is a really stellar company. It was able to grow its revenue by 32% per year since 2016. EBITDA was growing in the same time by around 30%. EPS after one-time events was growing at 32%. Cash from operating activity was growing at around 27%, and number of shares was decreasing in the same time by around 0.15%. So those are really good numbers, maybe with the exception of share buybacks, because yes, of course, this company was buying back shares, but in the same time it was, of course, issuing new shares to the management team. So since 2016, Facebook was kind enough to the management team to issue shares worth of around $30 billion. So it's like enormous motivation program. I'm not really sure it's justified, but well, those results are really good, but $30 billion is a lot. In terms of valuation and its historic valuation, Facebook looks quite good. The price to earnings is close to its average value of 25.5. It's a little below it. Price to EBITDA is below the current average, but we are getting close. So judging by the pace of growth rate that analysts do expect from this company in the coming years, so the 21% in the next 5 years on average, Facebook is expected to grow at 21% on average in the next 5 years. We can assume that this company is quite fairly valued. So right now it's not a super amazing opportunity, but it should be able to generate at around 12% per year for investors who is willing to buy shares right now.